This conference will now be recorded.
Okay, let's talk about discounts first. When we talk about discount, here we are talking about vendor related transaction. With respect to vendor discount, whenever we talk about, we are talking about discount received. From vendors, you will be receiving a discount. Anything that you are receiving in the name of a discount is called as a revenue or is called as an income. So your discount will reduce the vendor liability, resulting you will be paying the discount amount as a short payment to the vendor. For example, let me put example number one. Purchased from vendor for 10,000 with payment terms as 5% discount in 15 days and net due in 30 days. Let's say this is an example wherein we are talking about we purchased from vendor for 10,000 rupees worth, which includes a payment term of a 5% discount if you make the payment within 15 days. And if you cross 15 days and if you are paying within 30 days, which means from 16th day to till 30th day, if you are making the payment, you will have to make the full payment. If you are making payment from day 1 till day 15, you are eligible for 5% discount. From 16th day till 30th day, you are not eligible for any discount. You must make the full payment to the supplier. Here, whenever you talk about discount, your discounts are straight away determined based on the payment terms or terms of payment. Let me write here terms of payment. When you talk about terms of payment, this terms of payment will determine the due date of your invoice. Terms of payment will determine the due date of your invoice based on a key date. Your due date is determined based on a key date. This key date can be multiple dates. Please close your camera, Vishnu. Okay, terms of payment. This will determine the due date of the invoice based on a key date called as baseline date. Okay, terms of payment will determine the due date of the invoice based on a key date called as baseline date. Based on the baseline date, system is going to determine when a particular invoice will fall due. This baseline date can be document date or posting date or entry date. You can treat baseline date either as a document date or as posting date or as entry date. Depending on the business requirement, depending on the client requirement, you will setting up one of the dates as default baseline date. From the baseline date, system is going to calculate the number of days. From the baseline date, system is going to calculate the number of days to arrive at the due date. If it is 15 days, it will calculate from 15th day. Sorry, it will calculate from your baseline date till 15 days. If it is 30 days, it will calculate from your baseline date till 30 days. For example, here for the same thing, let me add I'll put 01/07/23. Assuming that on 1st July 2023 we purchased for 10,000, which gives us 5% discount if you pay within 15 days, and you'll have to pay the total amount if you pay within 30 days. Assuming this, we need to create a terms of payment, or a payment term will be created. You will be creating payment terms in OBB8. OBB8 is where you will be creating a payment term. Let us create this a simple payment term, and then we'll try to understand. But before we configure payment term, payment term is assigned in the invoice transaction. Payment term is assigned in the invoice transaction. Discount is posted in the payment transaction. You will be assigning the payment term during the invoice, and the discount will be posted during the payment. If you are not assigning the payment term during the invoice, it is not possible to post a discount during the payment. So straight away, these two are dependent things. You must include a payment time while recording the invoice in order to capture the discount during the payment. For example, invoice date, let's say 7/1, and payment date. Scenario number 1, if I'm making the payment, let's say today. If I'm making payment, let's say today, and let me put two due dates here. Invoice date, and then I'll put discount due date, and only the due date, net due date. Once I'm calling it as discount due date, wherein I'm eligible to get the discount if I pay within this due date. The other one is net due date, without the discount if I want to make the total payment, by what date I need to make the payment. Let's say, what I will do, I'll take this and then I'll add 15 days. I'm getting 16th is my discount due date. We will verify whether this calculation is correct or not, because I'm straight away adding 15 days. We will verify whether you need to add 15 days or you need to add 14 days. In short, should we include the invoice date or we should not include the invoice date? These dates also we need to assume. If not, we will end up getting wrong due dates, and we will end up making payment after reaching the one cutoff date wherein the discount is not eligible. Similarly, net due date will be your invoice date plus 30 days. Always you need to include the date in the date format, so that you need not calculate manually. You can straight away add 30 days or 15 days to the date directly, plus 30. And if I assume that I am making the payment on 10th, will I be able to get the discount or not? Point number 1. If I am making payment on 15th, will I be able to get the discount? Similarly, if I make the payment on 16, and if I make the payment on 26, if I make the payment on 31st. In each of this case, what system is going to do, how system is going to behave with your discount calculations, we have to practically understand. For which, what I will do, I will create one simple payment term using OBB8 transaction code. Let's log into SAP. I think server is down. I think there seems to be some network issue there. None of the server is working. Okay. So I'll show once the server is up, we will practice this scenario. I will explain how you need to practice, on what basis you need to get the logics, how system is determining the due dates, and how system is determining the net due dates, how these discounts are determined or captured in your automatic payment program. After this discount due date, you will be having one more thing called installment payment terms. Next thing, you will have installment payment term. When you talk about installment payment term, you are going to split your liability into multiple installments. When you talk about installment payment terms, you will be splitting your liability into multiple installments. For example, let's say on 01/07/23 purchased for what, 10,000. Terms of payment is 6 installments at 30 days interval. You purchased something for 10,000 on 1st July 2023. Terms of payment is 6 installments at 30 days interval, which means from one installment to the other installment, you have 30 days time period or 30 days calculation logic. So if you are purchasing today, you will be due for the first installment on 30th day, second installment 30th day plus another 60 days, third installment 60 days plus 30 days 90 days, fourth installment 90 days plus 30 days 120 days, and so on. You need to set up a payment term which allows you to calculate based on the installment mechanism. What this installment will do is it will split your liability into multiple parts. Normally, when you write the accounting entry for this purchase account to vendor account, here what you are going to do, accounting entry will be purchase debit, it will be 10,000, and vendor credit, this will be 10,000. This is the normal accounting entry that we will be writing if you are recording this entry without any payment term. The moment you put payment term which talks about 6 installments of 30-day interval, what system is going to do? It is going to debit, purchase will be debit as usual for 10,000. When it comes to credit, it is going to credit 2, 3, 4, 5, 6. This is going to put a credit in the vendor account 6 times. Vendor account will be credited for 6 times, and each time what system is going to do, it will take 10,000, it divides this by 6. 10,000 divided by 6, 1666.67. If I remove the decimals, 1666.67, 1666.67, and this will be a credit number. This is what system is going to record when you pass any installment payment term during the invoice. Your invoice will have 6 credits, and each credit or each line item will have a different due date. Let's say this will be, if I talk about, this is my invoice date 7/1, and my first thing will be due on this plus 30 days. Let me put this as date format. This will be due on 31st July, and this will be due on this plus second installment is due on 60 days, third installment is due on 90 days, fourth installment is due on 120 days, fifth installment is due on 150 days, sixth installment is due on 180 days. Okay, this is how system is going to calculate due date, and accordingly each line item will be generated. Your vendor account will not be credited one time, this will be credited 6 times, because for every line item there will be a different due date, allowing you to make the payment of that respective installment separately. These points we need to understand, and you need to be very clear with the logics, how system is deriving the dates and on what basis the system is splitting, how we are setting up this discount related terms. In short, the payment terms. Tomorrow if somebody is asking you, or if somebody is giving you this kind of requirement, make sure you are able to understand logically, and it will be easy for you to create. If there are any problems, it will be easy for you to understand. Next thing, you will have fixed day payment terms. When you talk about fixed day payment terms, these are basically, I will say, invoice is due every month on 17th. Let's say I want invoice to fall due on 17th of every month, irrespective of the date of purchase. So you will have different conditions based on which you are deriving or you are arriving at the fixed due date. In short, I will tell, if I receive the invoice in this month, I will have to make the payment next month. Whether I receive on 1st of this month or end of this month, mid of this month, I want you to make the payment next month on 17th or next month end. So there are certain conditions, logics which are predefined, which are agreed between buyer and seller. Accordingly, you need to create a payment term. Okay. And these
Sir,
three
that
things
one
I'll show.
purchase. Hello.
Yeah, go ahead.
Sir, that one purchase vendor he will give 6 invoices or one invoice.
He will give only one invoice. It will be like this. Your invoice will be 10,000 you would have purchased. On the invoice, payment terms mentioned as payment to be payable in 6 installments of 30-day interval. For every 30 days, you need to make one installment.
It
So
is
when
like
you're
a partial payment.
not partial payment, normally whenever you post any invoice, this is how so far your accounting entry is generated. 10,000 debit, 10,000 credit. Correct? So far when you posted invoice, this is what you were getting the accounting entry, debit and credit equal amount. But the moment you use installment payment term, debit credit will be equal, but the credit line items are not single line items. It is based on the number of installments that you are opting. Let's say if you are taking 6 installments, system will take this invoice amount, it will divide by 6. Whatever the amount it is getting, it will keep 6 line items credit side, and each line item will have the respective due date. So in your vendor account, if you check, you will find a 6 invoice
Okay.
with the
Due date
same
will.
document number. Same document
Okay.
number, 6 times it will appear with 6 different due dates.
Understood.
Yeah. This is again a different one. Fixed day payment term means you will have fixed day logics based on which we need to define the payment term. Once I will tell whenever I receive the invoice, I want you to make the payment on 25th day of every month. In other cases, I will tell if the invoice is received within the first half, that invoice is due in the same month. If I am giving the invoice before 15th, I want you to make the payment in the same month, if not next month. So based on these conditions, we must be in a position to create the payment term and then test, understand the logic on what basis system is deriving at the different due dates. This is one point. And we have to make sure that the discounts we are able to calculate, due dates we are able to understand with manual payments. The same thing we are able to do it from automatic payment program. In order to capture the discounts, do we need to make anything in automatic payment program? Is there any setting that talks about APP when it comes to discounts, or it is direct configuration? That also we need to understand. Next one, we need to understand taxes. Next thing, we need to understand the taxes.
Your voice is not audible, sir.
Sorry, is this fine now?
Yes, sir.
Okay. So when we talk about a taxation, we need to understand how these taxes are calculated and posted in SAP. This taxation is country specific. When we say country specific, depending on each country, the way taxes are calculated, the way taxes are reported will change. When we practice, we are not going to consider any country. We will be talking about taxation in general note. In general, how do we configure the taxation, how tax procedure is calculated, how you will create condition types, access a sequence, tax codes, how system will bring the tax amount, how the accounting interest will get posted for taxation. And we have two taxes here. One is your direct tax, which is nothing but withholding tax or TDS, tax deducted at source. The other one is indirect taxes, which is nothing but value added tax in some countries, sales and purchases in the other countries. In countries like US and all, you are going to have tax jurisdiction. So these things we need to understand. First, what we need to understand, you have two type of taxes, direct and indirect taxes, accounting entries in each. What will be the accounting entries in direct taxes? What will be the accounting entries in indirect taxes? How tax is calculated? For example, if you take any purchase, or if you take any transaction which includes a TDS or which includes a withholding tax of some 10%, make sure you are able to calculate the tax amount and you are able to record the debit credit accounting entry correctly. This is point number 1 on the direct taxation. Similarly, on the indirect taxation, if you take any example wherein you purchased on so and so date for 10,000 rupees, the sales tax applicable is 5% or purchase tax applicable is 15%. Based on the transaction, based on the purchase value, make sure you are able to calculate the tax amount properly and you are able to account it properly. Which account will be debited, which account will be credited, what will be the amounts you are going to take. Once we understand this basic logic on the taxation, we will have to talk about how are we going to configure, how are we going to set up withholding tax in SAP, how are we going to set up value added tax or sales purchase tax jurisdictions in SAP, how system is going to calculate this amount, how postings are taking place. When you are posting, you are not going to declare, you are not going to provide the tax related GL account. All we will do is we will only provide something called tax code. Based on your tax code, system will calculate the tax automatically. It will post tax to the relevant or the respective GL account automatically. On what basis system is calculating a tax, for which we need to understand the tax procedure, from where the taxes are getting calculated, and how system is deriving the GL account for posting the tax. For this, we need to understand condition type, access sequence, tax codes, and then the GL account determination. Once we understand these basic points, it will be easy for us to get a fair idea, fair understanding about taxation in SAP. There are certain topics for which you are supposed to prepare in a generic way. When I say you are supposed to prepare in a generic way, one of the points is your taxation, because this is not common everywhere. From country to country, the way you deal, the way you treat the taxation differs. But as a FICO consultant, you must be in a position wherein you can handle any client, any country's taxation. We cannot say that I have not worked for India before, or I have not worked for Singapore before, I have not worked for US before. According to SAP, it is taxation. According to SAP, it is taxation. According to SAP, this is either TDS or value added tax. Configuration for any country will remain the same except certain country specific settings. Except certain country specific settings, your key configuration logic, everything will remain same. Now, for country specific taxation, SAP will provide different notes. There will be different SAP notes, based on which you will come to know how to handle or how to meet the specific country's reporting or local requirement. Considering these points, we have to ensure that we are clear with the taxation, we are able to understand, we are able to explain if somebody is asking us. But we should not connect the taxation to the country, especially when you are learning. See the taxation from SAP point of view generally, so that you can handle taxation for any client, for any country. And we need to understand how these taxes are handled in your SAP automatic payment program. Are there any specific settings to include the tax related transactions in SAP, or they are taken care automatically? These points also we need to consider. After taxation, we will have to talk about foreign currencies. Foreign currency payments. When we talk about foreign currency payment, let's say you are going to talk about an invoice which is purchased from a supplier from US. Let's say on 01/07/23, purchased for 10,000 USD from a vendor in US. Let's say you purchased items, or you purchased something amounting for $10,000 from a vendor who is in USA. In short, you have imported from USA for $10,000. When you imported from USA for $10,000, you need to make the payment. When we make the payment, first of all, this is a foreign currency payment, because this is a foreign purchase or this is an import purchase. you have purchased from your supplier in dollars and you must initiate the payment to the vendor in dollars only. Can we make foreign currency payment first? If you are making foreign currency payment, what are the conditions, prerequisites we need to consider while making the foreign currency payment? Whenever you are making any foreign currency payment, there is something called exchange rate. Whenever you're talking about foreign currency transaction, we must talk about exchange rate. From foreign currency to your local currency, from your foreign currency to local currency, how you are going to convert the number, which means exchange rates, how you are going to maintain. You are going to have direct quotation. You are going to have indirect quotation. We need to understand what is direct quotation, what is indirect quotation, how we will maintain the exchange rate. Once we maintain this exchange rate, we need to make sure that you are going to record the invoice in the original currency. If your purchase is in dollars, you must record the invoice in dollar only. When I say this, I mean that your document currency for the invoice or the transaction currency for the invoice must be dollar. Based on the dollar, your company code currency, if it is INR, any other currency, the respective company code currency will be automatically determined. So you are able to see your vendor liability in two currencies. One is your transaction currency dollar, the other one is local currency INR. Once we make sure that you are able to see the vendor liability on both currencies, local currency and foreign currency, same logic, you need to calculate the due date for this invoice. On the due date, you need to again look at what is the exchange rate on the due date. Exchange rate on invoice date may be different. Exchange rate on due date may be different, on which you are initiating the payment. If there are any differences on the due date in the exchange rate, you are going to result either exchange loss or exchange gain. There is something called as forex loss or gain. When you talk about forex loss or gain, this forex gain or the forex loss is of two types. One is realized, the other one is unrealized. We need to understand what is realized exchange loss gain or what is unrealized exchange loss gain. At what stage the exchange realized things will come into picture, at what stage your unrealized exchange rate things will come into picture. We need to understand practically in such a way when you calculate even on a piece of paper, the rates, the amounts that you are going to get should be exactly the same that SAP is going to bring. Because whatever the calculations which SAP is doing, make sure you understand the same calculation. You also calculate according to SAP, so that it is easy for us to set up, it is easy for us to understand conceptually, logically, whatever is happening in the system. When it comes to realized will come only when you actually do the settlement. When you're actually making the payment, you are going to consider the realized exchange loss, realized exchange gain. Sometimes we may not be making the payment at the end of the month, but this payment will be made the next month. At the end of a particular month, if the invoice still shows as outstanding, you will have to perform something called currency valuation, which is nothing but foreign currency valuation. When you perform foreign currency valuation, we need to make sure by end of this month, assuming if we are making the payment for this invoice, what will be our impact? If we had made the payment, what would have been the forex impact, whether we would have got unrealized exchange loss or unrealized exchange gain. These things will have to get processed, and this entry, whatever is processed towards unrealized loss or gain, will be auto reversed on the next day of the month, which means this will be posted on the month end. If we are talking about July, this for unrealized exchange loss gain will be processed on 31st July. The same unrealized loss gain will be reversed on 1st of August. These all the points that you have to connect when you talk about a simple thing called purchase from a foreign currency. You need to connect all these dots, you need to connect all these points. Immediately these points should start striking your mind, otherwise it is difficult. We are looking at only one point, that is not the recommended way to look at the system. Initially, we may find it a little tricky, but that is still fine. That is how we will be learning. Now, if you are doing the manual payment, how you are going to handle the foreign currency payment? Now, we are talking about exchange rates. Who will maintain the exchange rate? How we will be maintaining the exchange rates? We need to understand. If you are talking about realized, unrealized, or in short, forex loss gain, how the forex loss gain entries will be posted, from where the GL accounts are coming. Is there any configuration? If yes, on what basis you will be maintaining this configuration? When it comes to realized exchange loss gain, from where the GL accounts are coming, how do you configure the process? When you talk about unrealized exchange loss, from where the GL accounts are coming and how you are going to configure this. These points we have to understand one by one in the sequential order. And how this foreign currency payments are made in your automatic payment program. First of all, is it possible to make foreign currency payment in APP? If yes, what are the settings that you need to enable to ensure that the foreign currency invoices or the foreign currency payments are allowed or accepted in APP? So there are certain settings which will enable you to include foreign currency transactions in automatic payment program. When it comes to foreign currency payment, from which bank account do we need to deduct the amount? If I am trying to clear an invoice which is processed in dollar, should I process the payment from dollar bank account or should I process the payment from INR bank account? How system is going to understand this is a dollar invoice, I need to deduct the amount from dollar account. In short, when you are executing automatic payment program, is system going to use one bank account of all the payments or different bank accounts can be used? All these points we need to question ourselves and we need to test and we need to make sure that this is how system is behaving. In case if you're talking about cross currency settlement or cross currency settlement, payment or clearing, how this cross currency settlement, payment or clearing will come into picture. When I talk about cross currency settlement, payment, clearing, I mean, let's say invoice is posted in dollar, but I want to make the payment in INR. My invoice is posted in dollar, but I want to settle this invoice in dollar. Or my invoice is posted in INR. Sorry, my invoice is posted in dollar. I want to settle or make the payment in INR. Can we make these kind of payments? If yes, how we will make this payment? What will be the impact? How system will clear the invoice if I do the cross currency payment? Can we do this cross currency payments in automatic payment program or these are possible only in manual payment? Slowly these kind of points we have to understand and we need to make sure that you are able to understand the different scenarios and you are able to execute, you are able to see the output. Once we are able to see all these points, it is going to give you more confidence that yes, there are different scenarios. I am able to understand the different scenarios. Tomorrow if somebody is asking, make sure, or even if somebody is telling, even when you are in a project, we have to confident enough that yes, I can work on this, I am aware of these points. And once these are all done, we will have to talk about your check processing and payment medium workbench or DME. When you're talking about check processing, how checks are processed in SAP, when you're talking about payment medium workbench or DME, how payment files are generated. So first we need to understand about the basic requirement, how checks are processed, on what basis the system will pick a particular check. How do you understand if I tell this is the payment document number, can you tell me what is the check number issued against this document number? We need to make sure, we need to understand that if I know the payment document number, I can find out which is the check number issued against this. In short, if I know the check number, I must know what is the payment that is made against this check number, how many invoices are processed against this check number. So we need to go based on the document number to find out the check number. At the end, you need to figure out how many invoices or what invoices are paid using this check number. On the other side, if I know the payment document number, I must know whether this payment document number issued with a check. If yes, what is the check number? When the check was issued, how many invoices were processed with this check? Sometimes if there are any mistakes in your check, you need to void the check, you need to cancel the check, you need to reverse a check payment. You have printed check number 1 on check number 2, 2 on 1. So how do you swap the check information on system? All these kind of points you need to practically see, practically experiment. Because these are all the sensitive information, sensitive processes that are used in every organization. Because these are directly connected to payments or the treasury module or the treasury department. Some companies will call it as treasury team or the finance team, cash team or the banking team. So they will be involved in it. So they will need your assistance immediate basis for providing the immediate support or to help them understanding where the payments are going wrong, what needs to be done, which entry to be reversed. First, we need to understand how the payment processing is working when it comes to check processing. Similarly, when you talk about payment medium workbench or DME, how we are going to generate the DME files. First of all, what information is coming in our DME file, for which bank we are sending the document, or for which bank we are sending the payment file, what information bank is requesting, how we are extracting this information from the system, how are we making this DME file or payment medium file. Are we processing this through automatic payment program DME, or we are processing this through any ABAP program customizingly? We've done any customization to generate the DME file, or we are using standard SAP payment medium workbench, in short DME. If we are using DME, what is the file format? Are we generating XML format or we are generating flat file format? In which sequence the payment information is extracted, from where we are extracting the payment information. All these kind of points we need to understand. Okay. And once we understand these points, we feel that, okay, now I am comfortable with automatic payment program. After completing all these points, you need to sit and practice in one go. That you try to create one vendor, try to create one invoice with a discount, another invoice with a tax, another invoice with a TDS, another invoice with foreign currency payment, and then try to generate a check. See if you are able to generate the checks. Try to generate DME file. Make sure if you are able to generate the DME file. When you're practicing, you need to complicate the scenarios as complex as possible, because in reality this is how you're going to have. When you're learning, when you're practicing, we will be learning with a simple detailed understanding to ensure that you get the logic, you understand the concept. Once you are clear with the logic concept, we need to make sure when we practice, you have to complicate the things. It is not that you will do simple things for your practice. You have to complicate the things for yourself. Try to take a different amount, check if you are able to understand, if you are able to make your own example or not. It is always very important that you are in a position to take your own example for your practice purpose. Like for everywhere we are writing some examples wherein we take the amount. You also try to make the similar example. You don't need to think anything which is out of the box. Whatever the examples we are discussing, the same example you create a copy, change the amounts, change the account numbers, and see if you are able to calculate the numbers from accounting side. You are able to write the accounting entry and you are able to bring the same result from SAP. And slowly you will start understanding the requirement. Slowly you will start verifying what you are doing is right or wrong. Otherwise, we will configure something, you will post a document, but we do not know whether it is right or wrong. So we should not practice in that way. Make sure whatever you are doing, at least we are able to decide if it is right or wrong. We may be right or wrong, but whatever we have done, at least we have to be convinced enough. This is what is my requirement. This is what I wanted to achieve. This is how I have done the settings, and I am able to see what I wanted to see. So that tomorrow if somebody is asking, you can take out the similar examples and then explain. Clear?
Yes, sir.
Any questions on this? Initially, each topic will take a little more time for us to understand, but once we complete this, the total APP we can configure, we can test within 2 to 3 hours. Total
So,
APP
sir,
we can complete in 2 to 3 hours, all the scenarios. Yes,
include this. How many steps? Around 20 conditions in APP, right?
correct. So once our basic APP or whatever we are doing is completed, so we will be talking, we will be thinking from the interview point of views as well. So anyways, in the evening we are going to connect, but I'll be taking the evening sessions in a different way going forward. So wherein yesterday I already mentioned that I'll be making everybody work on different topics on the information that I give, the information that I want you to extract. Similarly, even on APP, I will be giving different assignments for you to gather, and then I'll explain what you will be preparing for this and how you will have to work when you're in a project on these areas. All
Okay.
right, let me stop this recording.